Hello, everyone. Welcome to another YouTube Live episode. On today's episode, I'm going to chat about how much you really need to start a self-directed IRA. And I'm going to tell you, it's a lot less than you think. Thanks to technology and more digital options from an investment standpoint, it's much easier to get started to set up a self-directed IRA, and you need a lot less to actually get investments done. So the way I want to structure today's video is I'm going to start with what is a self-directed IRA, who generally opens self-directed IRAs, what's the advantages, and then talk about what the trend is in terms of investments, and really what do you need to open an account. Okay, so what is a self-directed IRA? IRAs were created by ERISA in 1974. And with the creation of ERISA, IRAs were created. Now, the IRA, in its establishment, in its birth, there was no distinction between an IRA that could do traditional investments or an IRA that could do alternative investments like real estate. IRAs were created under Section 408 of the Code. And essentially, the IRS code doesn't say what an IRA can invest in, but only what it cannot invest in. And there's really only three things that an IRA cannot invest in. And I've gone through this list many times. So here it is: life insurance, collectibles like art. And then thirdly, under your Internal Revenue Code section 4975, you cannot do any transaction that directly or indirectly personally involves or benefits you as the IRA owner or any disqualified person, parent, child, spouse, daughter-in-law, son-in-law, or any entities controlled 50% or more by such persons. Otherwise, you can do it, whether it's real estate, cryptos, stocks, mutual funds, private placements, hedge funds, private equity, venture capital funds, notes, tax liens, taxes, precious metals. You can do it. Okay, so now we know what a self-directed IRA is. Why doesn't Schwab or Fidelity or Vanguard allow you to open an IRA and invest in alternative assets? Since we know the IRS, when it established IRAs, allowed for all these investment options. Well, when an IRA is established, it needs to be established at a custodian. Okay, a custodian under Section 408 could be a bank, financial institution, or a state chartered trust company like IRA Financial. Banks, financial institutions, they make money from selling investment products, whether it's stocks, mutual funds, ETFs, annuities, or when they hold your money. Okay, they don't make money when you buy real estate or when you do a loan or when you generally invest in a private placement or your neighbor's business. They have an economic financial model, and that's how they generate revenues and profits. So as the custodian, under their charter, they are able to determine what their clients can invest in. Just like IRA Financial technically can structure our charter to say, yeah, we'll let people buy real estate, but not cryptos or not notes. So you have a lot of flexibility as the custodian of the IRA to suggest and to define what your clients can invest in. So generally, what the banks and financial institutions do is they say, okay, we'll let you buy what we sell, like stocks and mutual funds, but we're not going to let you buy real estate. Not that it's not allowed, but we don't make money when you buy real estate. So the way they phrase it is they say, well, real estate and other alternative assets are so risky, and we don't think you should be doing that, so we think you should be buying the products we sell. I get them. If I was in their business, I would say the same things. But just like Schwab, Fidelity, Vanguard, starting in 1974, were able to offer investment options to IRAs, the self-directed IRA industry was born in 1974, same time. The only difference is we don't offer investment advice. We don't sell products. So if you want to do alternative assets like real estate or cryptos, you would come to a self-directed IRA provider. Okay, so we don't compete directly with the Schwabs or Vanguards of the world. We complement them, okay, because they don't offer custodial services for alternative assets, and we generally don't push traditional investments like stocks. So it's a very complementary relationship. But that is really the difference why you cannot buy real estate at Vanguard. It's not that it's not allowed under the code. It's just they're not going to want you to do it because they don't make money when you buy real estate. It's as simple as that. Okay, so now we know what a self-directed IRA is. And there's different forms of self-directed IRAs. You can have a self-directed IRA where you can control the types of stocks you buy, okay? Which basically, in essence, every type of IRA is self-directed, right? Because you're not just giving the bank or a financial advisor carte blanche to invest in anything they want, right? So there's some self-direction. What a true self-directed IRA is, hey, you can do stocks and mutual funds, but you can also do real estate or anything allowed under the code. Okay, so that's what a self-directed IRA is. What are the advantages? Well, obviously the main advantage is diversification, control. You get to invest in what you know and trust. You get to invest in hard assets if you wish. Diversification. Most people's money, their primary source of savings is tied into the equity markets. Okay, there's only about 5 to 7% of IRA money in alternative assets. The rest is in traditional assets like stocks, mutual funds. So what a lot of people want to do, say, hey, all my exposures in the equity markets, right? So if the equity markets drop 20, 30%, as they are in 2022, I don't want to have all my eggs in one basket, right? That's the first thing financial advisors generally chat about with clients is, hey, you want diversification. You want fixed income. You want to have some equity exposure, maybe some precious metal exposure. We take it a step further for those clients that want more diversification to say, hey, instead of buying a bond, I feel more comfortable buying real estate, or I feel more comfortable investing in a private business or doing a loan to someone. I feel better. That will give me the fixed income. That will give me diversification, exposure to a hard asset, exposure to a different asset class, a different stream of income than pure equities, mutual funds, or ETFs. And that's what we do. We don't make money. The self-directed industry does not make money selling investments. We're not regulated. We're not part of FINRA. We do not sell investment products. So there is no conflict of interest. We will let you do anything with your money that is legal. Whatever you want to do, if you want to buy Iraqi dinars, if you want to buy Zimbabwe currency, don't laugh. I've had clients that. You can do it. If you want to invest in a swampland next to your community, you can do it. Okay. If you want to buy real estate in Lebanon, don't laugh. I've had someone do it. You can do it. Okay. So as long as it's not life insurance, collectibles, or anything self-dealing involving your retirement account and a disqualified person, you can do it. So we unlock people's money. We want to work with you. The only thing that we require is you do not do anything that's prohibited. That's not allowed under the code, which is what I previously mentioned. So other than that, you can do it. And that's what we are proud to do, is help clients and empower clients to make the investments they want. So now you know what a self-directed IRA is. What are the advantages? Now let's talk about how much do you need to get started? Do you need 500,000 bucks? Do you need 200,000? Great question, right? So when I started in this space 12 years ago, I'd say almost 13 years ago, set up a self-directed IRA was expensive. Okay, 1,500, 2,000 bucks. I remember when I started 12, 13 years ago, I was offering it for less. And why? Because I was able to do everything myself. I didn't need to outsource things. I'm a tax attorney. Okay, so I train people. Like, we can form the LLC. We can do the administration. We can do all this. Okay, I don't need to charge people $3,000 for a self-directed IRA. That's ridiculous. So right when I came in, I caused a disruption. People were attacking me. I had a company that said, well, we'll beat any price. And then when I came in way lower, like 50 to 70% lower, they carved it out. Oh, well, anything for IRA Financial, we won't beat. Okay, and that started the downfall for that business, and obviously the industry changed. And I'm proud of that. There's no need to spend a lot of money to set up a self-directed IRA. So what we've instituted, and we feel really good about it, is we have flat prices. So if you want to open a self-directed IRA, it's $360 a year flat. Okay? There is no asset valuation fees. There are no transaction fees. There are no hidden fees, okay? If your account's 30 grand or your account is $1 million, you're going to pay the same price, $360 a year flat. Okay, we charge quarterly, and we're on your side. We want you to do well. We want you to have an account that's worth $5 million. I've seen it over the last 13 years. I've seen people start at 30, 50, 100 grand and go to the millions. Okay, I've seen it. So we want to be a partner with you. We don't want to have to charge you more because your account goes up. So we're super proud of flat pricing. We have no wire fees. Okay, this is something that I believe we're the only, I know self-directed IRA company, but also probably the only financial institution, whether it's JP Morgan or Capital One, they're going to charge you wire fees. We eat that cost. We partner with Capital One. They charge us wire fees. We don't carry it to you. We eat it. Why? Because we believe in flat, transparent pricing. So you want to send a wire, you want to send a check, you want us to do transactions, your account goes up in value, paying the same amount. We're not going to increase your fees based off the transaction cost or the transaction profile. We're proud about that. So what's my point? My point is you don't need a lot of money to start. Whether it's cryptos, private placement, crowdfunding, you can start for $5 grand. I've had many clients open accounts with $1,800, $1,500. 10 years ago, that didn't exist. 10 years ago, the average account's probably 140, 150 grand. Now it's dropped. Why? Because there's investments you can do where you need less. Even if you're a accredited investor, there's platforms like Yield Street and like other really amazing platforms where you can invest for 15, 20, 25 grand. Okay, and with our fee structure at $360 a year flat, you're not getting eaten up in fees, right? You're not paying 1% of your value, which escalates as it goes up. No. So the answer is you could today start with a lot less. I would say you should start with at least $360, right? You don't want to put $360 in your IRA and just pay all in fees. That doesn't make a lot of sense. But there may be investments where, hey, I want to lend my brother or my sister $1,500 or $5,000. You can do it. It's cost effective now with IRA Financial. Yes, we have clients that invest $100,000, $500,000, millions of dollars in different types of investments. That's also fine. But what's important is we don't want to scare off people to say, hey, I only have 20 grand or 30 grand in my IRA. I don't want to pay you $1,000 a year in fees. I don't want to get nickel and dime for every wire, every check, every question I ask you. I have to pay a research fee. No, I just want to go somewhere that will take care of everything for me, take care of all the IRS administration, answer my questions, and not hit me up with fees every time I do something. Well, we're the place. We will do it. We will disrupt the industry again and bring the cost down so that you could take control of your retirement money. Right? That's the point of this. We're not financial advisors. Why should we be charging you excess fees when you are doing the work? You are making the investments. You are deciding what to invest in. We're simply the back end that helps you do it legally, take care of all the IRS administration, and hopefully allow you to do it efficiently through technology, through our app. That's our goal. We want to be partners with you and help you build your account for your future. And we don't want you to have to get robbed in fees, so less money will travel to your family or to you when you retire. So that's something we feel really strongly about. What's the trend in industry? The trend now is technology. The industry is doing a much, much better job today than it did 13 years ago about making self-directed retirement accounts investments more cost effective. And if you're looking for a custodian, obviously, yeah, I think IRA Financial is the best, but if you want to do your homework, you should go to RITA, us.org, Retirement Industry Trust Association. It's the main organization for our industry, and you can check all the members. There's lots of great companies that are members of RITA. There's a lot of good information there too about what our industry does, what a self-directed IRA custodian does, and you can see for yourself. We're a regulated industry, and we provide really good services, okay? And I can speak for our whole industry, especially the members of RITA. If you work with a self-directed IRA custodian that's a member of RITA, you're going to get great service and you're going to get great expertise. And now, thankfully, prices have come down. So you don't need 150, 200 grand in your IRA to invest. How do you fund a self-directed IRA? And this is the last thing I'm going to really chat about on today's episode. There's two ways to fund an IRA. One is a contribution. Under 50, $6,000, over 50, $7,000. Those contributions could be pre-tax or Roth. If you want to do a Roth, thanks to the backdoor Roth IRA strategy, no matter what you make, you can always do a Roth IRA through a contribution to an after-tax IRA and then a conversion to a Roth. If you want to do a pre-tax IRA contribution, there may be limitations on your ability to do so based off your income level and your exposure to a 401k. So if you have a 401k at work, even if you don't participate and you want to now make a pre-tax IRA contribution, generally if you make more than 125,000 or so, you're going to have limitations. You can still do a Roth IRA through the backdoor strategy, but you may have limitations. If you don't have access to a 401k at work, you're going to be able to do a pre-tax IRA. So that's the contribution aspect, 6,000 or 7,000 if you're over 50 for 2022. The most popular way to fund an IRA is through a transfer or rollover. There's over $500 billion of rollovers each year from retirement accounts. A transfer is IRA to IRA. Those are tax-free and can be done as many times as you want. 401k rollover is like a transfer. The only difference is from a terminology standpoint. When you move money from a 401k to an IRA, it's called a rollover, where IRA to IRA is called a transfer. Same thing. One thing to remember, if you want to move money to a 401k, you need what's called a plan triggering event, which means you need to have access to your funds. So how do you get a plan triggering event? How do you satisfy those rules? Really two popular ways. One, you turn 59 and a half. Two, you leave your job. So what I'm trying to say is if you are currently employed at a company and you have a 401k, and let's say you don't love the investment options and you want to do an IRA, you're not going to be able to fund that IRA if you're currently employed and you're under 59 and a half. Not my rules. Those are the 401k rules, just the way it is. If you leave your job or you reach 59 and a half, you should have a plan triggering event, and that is how you can move the money to an IRA or self-directed IRA tax-free. All direct transfers and rollovers are tax-free. Okay. The only time you have to get stuck with 60-day limitations is if you do an indirect transfer rollover, where basically the money goes to you from your 401k or IRA before it's sent to another retirement account. That can be only done once every 12 months. You have 60 days when you have that money. After 60 days, it becomes taxable. So you need to make sure you stay within that 60-day window. But when you go direct to direct, bank to bank, custodian to custodian, you can do it as many times as you want, unlimited fashion, and it's all tax-free. So that's the most popular ways to fund an IRA. And that should give you all the answers you need. We know what a self-directed IRA is. It's essentially an IRA that lets you invest in alternative assets. All IRAs should be self-directed. That is my vision. That is my passion, and that's what I am going to do. I'm going to create a platform. Hopefully, this end of this year, it will come to fruition, where you'll be able to buy stocks, have exposure to ETFs, buy cryptos, do alternative assets, all for one in one platform, all for one flat fee. So you don't need to have money at Schwab anymore. You can have all your retirement money with us, with IRA Financial, one place, one flat fee, no wire fees, no transaction fees, no asset valuation fees, no transaction fees. Clean, simple, transparent, cost effective. You don't need a lot to set up a self-directed IRA anymore, right? Flat fees. There's different types of investments. You can do cryptos. You can do crowdfunding. You can do private placements, Reg A's, Reg D's, as long as you're a credit investor for 10, 15, 20, 25,000. And with a flat fee of $360, if that 25 goes to 50 or 75 or 100, you're still paying the same flat fee. You don't have to worry about having to pay more. IRA Financial or any self-directed IRA custodian will take care of all your IRS reporting, all your administration, so you can focus on what you do best, investing. We'll take care of what we do best, administration. So there it is. I hope everyone now understands what a self-directed IRA is, how easy it is to fund it, the different ways to fund it through contribution and rollover, why people generally self-direct, diversification, investing in a hard asset to hedge against inflation, investing in assets you know and trust like real estate, and also, most importantly, how you can now do it for a very, very low, cost-effective price. So thank you for watching. If you have questions or want to learn more, we have an amazing team of tax professionals. Give us a call. Go to IRAFinancialGroup.com, 800-472-0646. Chat us. You can send us a message. You can set up an appointment time. One of our tax professionals will chat with you. We're here to help. So if you have questions, we got the answer. So thanks for watching. Have a great day, and talk with everyone again next week. Take care.